But let's shift gears then and talk about what we're discussing on the editor's radar today. And it's an interesting report coming out by Goldman Sachs talking about how MSCI India underperforms when Brent crude prices rally. And let's talk about what history has shown us as well.
You know, you always tend to think that, but you look at, and this is Goldman Sachs data.
Yeah.
So I'm going to just quote them, Goldman Sachs data. What they've looked at, excuse me, what they've looked at is that they've looked at more than 20% rally in Brent. So every time when crude has rallied or Brent has rallied more than 20%, the first point in which you think that crude going up, Indian market should go down. But is that passé now? Looks like that seems to be a passé because more often than not, every time crude has rallied, the linear correlation, which is logical, crude going up, Indian markets coming down because crude is a dampener for Indian economy, that is getting challenged. Between Jan and June 2008, crude rallied 69%. Then you look at another instance, 82% rally in crude. October, followed by Feb, 33% rally in crude. Look at the MSCI index. 2008 is a special situation stock, so let's take this one out, global financial crisis. But historically, every time when crude have rallied, and we are looking at over 20% rally, there has been no linear negative correlation. Let's look at one more graph, and then we'll show the average in terms of where the market has stood out. So the average rally in Brent, when it has been more than 50%, MSCI index, according to Goldman Sachs, has given you a positive return. And you look at ex-Japan portfolio, that's also plus. Bottom line here is that what should have been an inverse correlation, actually there is no correlation whatsoever. So while we spend a lot of time in discussing that, okay, crude is up, that is bad news for Indian market, of course it is challenging for macro. Of course, if crude goes above $100, $110, then it reaches that level of where it really hurts and haunts the macro. But below $100, closer to $85 to $95, every time crude has gone higher, in the near term, Indian markets have had no linear correlation whatsoever. So every day in the morning, looking at the crude price and judging the market, I think may not be a great idea.
Yeah, so the Goldman view is Indian markets could continue to stay resilient despite what we see with crude oil prices.